So Yash is an architect. I've explained this multiple times in videos, and he's an analyst. The most important take of this video is the stock market analysis of an independent villa.
All the independent villas in this market, right? We are dividing it into three sections. Prime, it's like your ultra luxury, let's say, segment. Then you have your golf course, your prime golf course, and well designed and well, let's say, established master communities. And then you have obviously something which hit the COVID era, which was your established family villa communities, that suburban core.
So in this video, we're going to cover all the independent villas in Dubai, every single community. What is the supply?
Right now, currently, in all the independent villas, so for example, in all the communities, let's say, independent villa supply is anywhere between, I think, 17,700 to 18,000 units in the ready market.
Now, understanding these numbers is extremely important because people think an oversupply and oversupply. So, which segment should be targeting? 17 to 18,000. There are only 17 to 18,000. We're going to cover them all into three categories. Second, we're going to cover the value and volume dynamics. So, Yash is going to cover. He's my numbers guy. So, Yash is an architect. I've explained this multiple times in videos, and he's an analyst. So, he's going to cover the value and volume dynamics. And he's going to give the most important take of this video is the stock market analysis of an independent villa. Now, this is the analysis you need to understand the trends, because I think trends are very dynamic in Dubai at this stage. Sure. It takes like probably a year and a half. So we'll explain exactly how the stock market analysis. And finally, we're going to give you our top investments or investment picks of this year.
Yep. So all the independent villas in this market, right? We are dividing it into three sections. You have your prime
and mature.
Your mature, it's like your ultra luxury, let's say, segment. Then you have your golf course, your prime golf course, and well designed and well, let's say, established master communities. And then you have obviously something which hit the COVID era, which was your established family villa communities, that suburban core.
So we're going to cover, these three segments, all the communities. In total, there are about 23 communities as of now. That's about it. Sometimes we need to simplify data. What is the average price per square foot in your prime and mature community?
So I think if you're looking at trading volume, especially on Property Monitor, in these areas like Emirates Hills, like Jumeirah Islands, you're going north of 4,500, 4,600 dirhams. There were certain transactions which even reached 6,000, 6,500 as well.
So I think that's the difference. So this is an example for non-refurbished sections. So this is prime. We are in lakes right now. We can see Emirates Hills right there. Prime real estate. So we're going to cover prime. So even in our top investment picks, we'll explain to you what is prime. And next is, the golf and the master plan villa community.
So prime and mature markets, obviously the ultra luxury section. So we are right now in Emirates Living. This is lakes. There's Emirates Hills as well. And I think, one of the two most commonly used terms for ultra luxury and prime is Emirates Hills and Palm Jumeirah. Correct, right? What makes these prime as well, right? What makes these ultra luxury is, I think overall, when you're looking at even density in terms of, area, number of villas occupied, when you're looking at locations, obviously Palm Jumeirah, you have the water. Emirates Hills with time obviously became that creme de la creme. And then a lot of times what I understand is it's also that clientele that you always talk about. Because clientele is, something very important.
Who lives
here?
Who wants to live? who lives.
Correct.
Because sometimes it's the market perspective.
Yep.
And you cannot change that.
Correct.
You know, there is like maybe Damac Hills is a phenomenal community.
Obviously.
It's
It is.
a beautiful community.
You've seen it.
I love the V75. It's fantastic. But it's one of the best floor plans I've seen. The quality of construction is probably better. But I cannot change the market perspective. Somebody asked me, should I buy the V75 for 17 million? And then you have, let's say, Jumeirah Golf Estates 2 on the golf course for 17 million. You have Palmyra Collective at 17 million.
Yep.
Which stock would perform the best? Now, that's my job to explain that, right?
Absolutely.
So this is key. Like, what makes it prime, prime and mature? The second is your golf course and all your master planned villa communities. Now, what is the average price per square foot?
I think, you know, if we're talking about prime golf course communities, you have a section in Dubai Hills.
Yeah.
You have obviously Jumeirah Golf Estates as well. These today are trading anywhere between 3,200 right up to 4,000. I think there was one instance where somebody did refurbishment in Jumeirah Golf Estates and they traded up to even 4,300.
No, in Meadows, we traded at 4,400 dirhams square foot. In Meadows, it looks pretty much similar to this property right here.
Okay.
But the internals were completely changed and we traded at 4,400. But that's your peak.
Yep.
That is your peak.
That is your peak.
Identifying peaks.
Correct.
Another purpose of this video, the stock market analysis, extremely key part of this video is understanding your peaks, understanding at which price we should enter, understanding the supply, understanding the demand.
Yep.
And finally, your established family villa communities, your suburban core. So what is the average price per square foot over there?
So again, I mean, taking examples of, I think one really good example.
Okay.
Yes, by Emaar, Arabian Ranches 1, which was established almost, I think, 2 decades back. Now, over there, independent villas are still trading at that 2,500, 600. They're touching, let's say, there's certain, again, obviously products touching 3,000, but that 2,500, 2,600, 2,700, that's your sweet spot, at least for now.
See,
talking about
now, another main purpose of making this video is that there are a few trends that I want all my subscribers to understand. One trend is that if you observe any portal, okay, whether it's DXB, Interactive, Property Monitor, there is a trend where 4-bed independent villas in the next 2 to 3 years are going to touch the 1 million dirham rental mark. So that entire audience is going to move towards buying. Where will they buy? And how can we as investors take advantage of this trend?
Absolutely.
Number 2, there is a mass market phenomena. So this suburban core hits your mass market. Sometimes the safest or the best investment, the safest, I won't say best, safest is, okay, if I'm getting an average annual growth rate of 10 to 15%, I'm hitting an ROI sweet spot of around 8 to 10%. That's a beautiful investment, you know? So how do I hit the safe spot? If I take a higher risk with my ultra prime, so let's cover it one by one. Let's show them, let's explain the value dynamics, and meanwhile, let's show them what a golf course and master plan company looks like. Let's do that. See, those are one of the houses I'm refurbishing. Now, this is another trend, you know, refurbishment. Between 24 and 25, there was an opportunity, you know, I could pick up a house, refurbish it, because construction costs have also gone up.
Yep.
Refurbish it and make a decent margin.
Correct.
Now, the sellers have increased the price so high that it's not viable anymore. That is why, for in Jumeirah Golf Estates, I have a villa for sale for 35 million. About 30 million, I'm not getting those kind of buyers. Yeah. So, same case I've observed in Jumeirah Islands, houses above 30 million. So, this is another trend. One is refurbishment trend. People who hopped on that trend between 24 and 25, they made money. Now that trend is difficult to make money.
I think that time frame is slowed down now and the premiums are...
It is because it's all about that entry price. Now I'm not getting that right price. So I cannot make money over there.
Correct.
And another trend I've observed is buyers above 30 million are not easy buyers, and they have options. Earlier they did not have enough options.
Absolutely.
Now you have to have a really solid product to sell it to a 30 million plus buyer.
Correct.
So that is why this volume dynamics that he's going to talk about is extremely important for you to understand.
Yep.
Let's understand the volume dynamics.
See, just to give you guys a quick analysis of 2025, the Dubai real estate market in 2025, you're talking about residential, commercial, blocks, buildings. The total sales volume was 215,000 transactions which happened in 2025. It was valued at over 680 billion dirhams. Now, when we talk about housing market, the housing market itself in 2025 was divided into two, let's say, categories. You have primary, which is from the developer, typically off-plan stage, and you have resale. Both combined were 34,000 units. Off-plan itself was 22,000, almost let's say 50 units from the developer in the whole of 2025. Now, see, there's one very interesting angle because this is all which has been transacted, which means somebody bought, they signed the SPA and then they moved ahead. See, a lot of times, buyers ask me that whenever a developer launches a product, right, what is the ratio or what is the timeline it takes for the inventory to sell out? So what we've always noticed is for townhouses and for villas and particularly, let's say, for certain mansions, not all, the trajectory of selling and the trajectory of absorption for every client, typically in off-plan launches, is much better than apartments. Because even I'll tell you, for example, we had launches in the Valley, we had launches in the Oasis where I'm not trying to say it got 100% sold out on day one. It takes time, but it had a much better absorption rate than maybe even something compared with an Emaar developer like Creek.
See, we'll quickly get back to volume dynamics. I don't want to divert from the topic, but quickly on this topic, I look at this like a positive sign. Now, this is where correction cannot be a bad thing. See, when stocks get quickly sold out, that is concerning. So the top developers increase the payment plans. See, earlier, there was a time when Damac used to sell 50-50. Now, Damac is also going towards 80-20. Emaar is trying 90-10, 80-20. They are filtering. They only want people with genuine cash who are legitimate investors or end users.
Yep.
They are filtering themselves.
Okay.
And that is exactly why once you understand the volume dynamics of independent villas, you'll understand, we'll need to assess the demand, the genuine demand. It's hard to do this in apartments because of the volume dynamics, but that will be discussed in a different video. Let's understand the volume. Now, 22,000 units.
So 22,000 units from the developer were transacted in 2025.
Right.
Out of which we've always seen that in any community, there is almost 65 to 70%, which is townhouses.
70% are townhouses.
Your 5% is typically your mansions, higher end, let's say, products. 25% of that is your independent villas. And then you have 3, 4, 5 and 6 bedrooms as well. So if you look at it from a volume perspective, you're looking at total transactions between 5,000 to 5,300 independent villa units from the developer in 2025.
So now these 5,000, see, now this is the average you should understand. In a year, total current existing market, 17 to 18,000. Now, this is why the rents are so high, because the supply is so low. Hence, the demand, the rents are so high. Now, we need to assess the future supply. Next 4-5 years, how much supply is coming in the market? It is just around 4,000 to 5,000. In that 4,000 to 5,000, there are 3-bed independent villas, 4-bed independent villas, 5-bed independent villas, 6-bed independent villas. 4 different categories, 4 different dynamics.
Yep.
I've explained dynamics. Now the economy class, business class, first class theory won't fit into this. That is why we're segregated into prime market,
Yep.
golf course and master plan communities, family core, suburban core sort of locations.
Yep.
But it's very important to understand which segment you are in.
Correct.
70% is the mass market. Mass market, we'll understand. Let's go to the mass market.
Correct.
But we need to analyze it like a stock market. You want to do it over there?
Udhar. Different locations.
Yeah,
so this was nice.
But have you covered the volume dynamics?
We've covered the volume dynamics. So ideally, see, the thing is, so 5,000, almost 5,200 units as supply will hit the market by 2029, 2030. One very interesting trend that I've always observed, and this is what I call, who is your, entry mover during off-plan? For independent villas, almost 60% are these people who are genuinely looking to relocate to Dubai.
Yes.
These are buyers.
Yes.
These are not quick flippers. They don't want to put 20% and then, back out. And there's also that 10 to 15% after that.
Like the guy we were talking to yesterday.
Correct, absolutely. Absolutely.
Where is he from? Kuwait?
No, so they were a family from Kuwait and they want to now slowly relocate to Dubai.
One daughter's in UK, one daughter's in US. The UK one is a doctor, the US one is a economic.
Correct, absolutely.
And the UK one wants to move like yesterday. The US one is still confused.
Absolutely.
This is, we're explaining a common dynamic.
Absolutely. And this is a real guy.
A real
of client.
Yes.
And so these guys, the whole intention, and see, this is one thing, Zohaib, which I feel, at least in 2025, I'll give you my real insights. Forget about the market as well. Every independent villa that I've sold in 2025, even from an investor mindset, the mindset has changed to now this flipping in 3-4 years, more to holding, wealth generation and passing it on.
So what's important in the volume dynamics is let's say we are assessing that, okay, the next 5 years, we're going to look at around 4,500 to 5,000 units in average coming every year. In these 4,500 to 5,000, around half of them are end users. So what is your actual supply? And so which product should be hit?
Correct.
Let's assess that'll be in the final stage, which products we're going to pick and which section does it fall into. But let's analyzing it like a stock market is your key takeaway from this video. Okay, wait. That's how the villa should look like eventually.
Contact us for more.
You can see refurbishment over here as well. Everywhere you can see refurb. Now this is one of my favorite community. I love Emaar. I love Emaar communities. Okay, now before I start on the community, you saw that highway bridge I was pointing out to when I was driving. Now this is a fantastic Dubai as a government. Fantastic. I made a video earlier, like a few years ago, saying don't invest in Hessa. There's so much traffic. I was wrong. I don't mind admitting I was wrong. Because I thought, personally, even I thought it would take years to change the infrastructure. Now, from this location, to the south is basically Nashama, Township, Mira, Oasis, and we're talking about a product over there as well. A metro line is coming over there, further south, okay? Mira, Oasis, my friends live there. All the way to Burj Al Arab. On a Sunday takes 8 minutes, on a regular takes 15 minutes because of that one highway. Now I'll explain. Now this is your suburban core. Mass market, family market. We are in Arabian Ranches 2. Now if we understand Arabian Ranches 2, the dynamics, you'll understand Arabian Ranches 3 and understand that entire sector. Right? Look at it. There's a school right here. There's a souk over there. There's a club with gym and amenities. You can see somebody walking. You'll have your walking and your cycling tracks. It's Ramadan. You can see the culture. See, people, we accept all cultures. It's not like, say, I'm fasting. She's not. So they're having a good time. Okay. And it's hot. So this is just to understand, okay, the third section.
Sure.
And now he's going to give you the stock market analysis.
No, perfect. And just a quick pointer on suburban communities as well. So, see, independent villas, they typically, or what I've at least seen is post-COVID, and these are all your communities which really, they were more into existence. Obviously, your price point was low, your acquisition, cost was also lesser. See, the average price per square feet to buy independent villas in these kind of communities, yes, it touches that 2,500, 2,600. It's still in that 1,800, 2,000-ish range. But what he mentioned is really nice. I think that liquidity quotient, because it's a much, it's like that mass market. It can move faster. Maybe the premium is a little less.
This is 100% occupied community. It's hard to rent in this community. It's hard. It's hard to find a property for sale. Now, a property that looks like that, you might get it at around this 2,500 to 2,500 dirham per square foot. When it gets refurbished, that's when it jumps towards the 3,200. Now, this is where you can start analyzing it like a stock.
Correct. Absolutely.
Independent villas.
See, the whole analogy of this video as well, obviously, we've cut it into sections, but the major part was everybody talked about post-COVID growth, right? I mean, I think the benchmark now that people are analyzing real estate is your COVID price and then your upliftment from there.
Yeah.
And what we talked about in terms of what the price grew and all of these things. So what I've done is, see, post-COVID, 2021, 2022, right? A lot of your suburban communities and a lot of communities towards the south, maybe like Furjan, these got established, and these were launched by prominent developers like Emaar, Nakheel, Damak. You had one of the most interesting, but it jumped up a lot, Tilal Al-Ghaf by Majid Al-Futtaim, obviously their first community. So what we're trying to do is we're trying to understand, taking a case study, for example, for every independent villa which was launched in these communities in 2021, 2022, how it has performed pre-handover, where you have payment plan leverages, and how it has performed post-handover, right? When you don't have any leverage now of the payment plan, but the community is ready, you've maybe kept it on rent for 1 year, and now you're trying to resell it. So I have some very interesting numbers and facts.
No, so this is the idea, right? We need to understand trends and pulses. Pulses are the ones that are going to give you, plus the volume dynamics. Pulses gives you the jump in price. Trends, if you assess the entry points, it's exactly like a stock. Let's wait and hear, and then I'll give my.
So, okay, Tilal Al-Furjan. So Tilal Al-Furjan 1, right? That first phase of Tilal Al-Furjan by Nakheel. A 4-bedroom independent villa built up of around 4,800. Your plot size was 6,000, good plot size. Now, it was bought by somebody initially at that off-plan stage from Nakheel in around August 2022. The acquisition price was around 4.3, 4.4 million. These people sold it, right, in August 2024, which was again that pre-handover phase, 3 to 6 months pre-handover. They only had to pay 50% of that. That time the payment plan from Nakheel was 50-50, and they could sell it at 6.2 million, right? Now, the return on equity was almost 82%, but that time frame was only 2 years. So your average annual growth rate was almost 40%, right? That's one example. Second example, Harmony 1. This is something which every, I think, broker which understands villa markets talks about, right? Tilal Al-Ghaf, 4-bedroom independent villa, built up 3,900. Your plot size is touching 6,000. Over there as well, somebody acquired it at 3.7, 3.8 million. This is in March 2021. This is just obviously post-COVID. And somebody sold it pre-handover in December 2023. They had only paid 60%. They sold it for 6.2. Their return on equity was 108%. The duration was 33 months. Their average annual growth rate was again touching that 40%, 39%. Number 3, this is Kaya 1 by Emaar, Arabian Ranches 3.
Very similar to this villa.
Very similar, absolutely, to this villa. 4-bedroom independent villa, built up 4,500. Your plot size is touching 5,000. Again, this was acquired in November 2021 by a user at 4.35 million dirhams. This was sold pre-handover in December 2024 at 6.5 million. The return on equity, again, 82%. What he has paid is only 60%. Your average annual growth rate is touching 27%. Now, for the fourth example, and this is obviously where I'll come to a point when I'm giving you all of these examples, I'll come to two things: payment plan leverages and how units and basically typologies make a difference. So there was one obviously big community everybody talked about by Mr. Hussain Sajwani, Damak Lagoons, right? Which was his dream of making something like, let's say, the south of Europe. Santorini, the first cluster of Damak Lagoons, they had these independent villas. They had these 6-bedroom independent villas. Now, the 6-bedroom independent villa had a built-up of around, let's say, 4,000. It had a plot size of 4,700. It was bought at 4.3. This was in Feb 2022. It was sold pre-handover again in October 2024. Now, Santorini had a 70-30 payment plan. The 30% was post-handover. So somebody sold Santorini at 5.6. Somebody bought it at 4.3. The return on equity over there was only 43%. Your average annual growth rate in 32 months was only 16%. So now when you understand the above 3 communities, these were again independent villas. And if you look at the price point of acquisition for all of these, this is pretty much in that 4.1 million zone for all of these 4 at the similar timeline of 2021, 2022. But these 3, they performed much better pre-COVID. And if you look at even the payment plan, even Santorini had, let's say 70%, which was due. It could not jump that much. It could not really, reach the heights which an Emaar with a Tilal al-Gaf, which let's say, a Tilal al-Furjan did.
So we're assessing like stocks, right? With
Correct.
Apple, Tesla,
Absolutely.
stock do we get it? Nvidia, which stock do we get it?
Absolutely. Now, the main point, right? Because a lot of times clients ask me, okay, this is payment plan. This is leverage, right? This is where you're looking at leverage as an opportunity and then you're trading at, let's say, certain price. Now let's understand what happened to these 4 options when the handover happened and after 6 months to 1 year, who traded these?
And then there's no leverage.
When there's no leverage.
Which is the current market situation. There's very less leverage because the government itself wants to filter.
Correct.
We do not want players.
Absolutely. So now very interestingly, Tilal al-Furjan, this was sold pre-handover for 6.2 million. Now in October 2025, almost a year and a half later, this was sold at 7.8 million. Now, obviously, your average annual growth rate, because you've held the stock for long, has dipped a bit. It's around 23-24%. But your overall profit as well has now increased because that same stock for 4 million that you sold for 6.2, if somebody had held it for almost 1.5 years, it had made to, let's say, 7.8. Similar for Harmony. So Harmony was the most interesting example because Harmony, again, somebody bought it at 4 million. If they had held on to the product, obviously 2 years later, it is now trading at almost 8.6 to 8.7 million. I mean, when we're giving these numbers, this is an average. There are going to be trades done less. There are going to be trades done more. But on an average, somebody at 4 million still could make 8.6 after all the handovers have happened. Also, after all your payment plan leverages have gone. For Arabian Ranches 3, similar. Kaya, which was sold during that, pre-handover at 6.5, today is even trading at 7.8, 7.9. The last example, which is Santorini, even after handover, this was a trade done in August 2025. It still could only touch 5.7. It still could not really, calculate after handover as well. So my whole analysis for this, or my whole, let's say, conclusion for this thing is, see, there are 3 very important takeaways from this analysis. Okay, number 1. Yes, we completely agree that there was a COVID trend. 2021 to 2025, a lot of people made money in a very short period of time. And this is why we analyzed what happened to independent villas for both profits, return on equity, and also the time period, average annual growth rates. On an average, what was your growth rate? The second important factor over here was Emaar, Nakheel, all your big developers, right? Even Damak. These post-handover 50-50 balloon payment plans, you cannot get these anymore. Equity is restructured to a point where you're paying 70-80% upfront, pre-handover. And the third most, for me, obviously as an architect and as an analyst, in all of these 4, everybody jumped in price, yes. But a Santorini, which in theory, see, a lot of times people feel that, it's a 6-bedroom independent villa at 4 million, which is a bang for my buck. But now when you go deeply inside, again, apart from Damak's overall controversy with the reputation and aside, but Damak Santorini could not climb as much as all of these.
Because I'll tell you why. What is the plot?
Correct. It's 4,700, 4,800.
What is the plot of, let's say
even like an
Kaya.
Okay.
What is the plot of a Kaya?
A Kaya plot itself for a 4-bedroom was touching 5,000.
See, now the thing is, when an end user, you must only think what the end user cares about.
Absolutely.
When an end user comes to a house, all he cares about is what? Few things. Living room, kitchen, master bedroom, wardrobes, plot.
Correct.
Plot. Because plot is where your kids play, your barbecues are done, you call friends and family over. Plot is critical on the entire view of the house.
Absolutely.
So that's... See, these critical aspects people don't think about, And so all you have to care about even if you're an investor, is what will your buyer think of the house? That's all you have to care about.
Because I completely agree. Because see, there's one more angle to this. There's plot and there's something called as floor plan spacing dynamics as well, which means how is your floor plan designed? Because a lot of times, you've seen in our previous videos as well, we've analyzed, forget the built-up plot.
He's an architect.
Yes. Master bedroom sizes, kitchen sizes, how many walk-in wardrobes. Because at the end of the day, see, I'll give you another hack, just a simple hack. Your plot can be huge, but we need a plot which is also wider. You don't need a plot which is just lengthy.
Narrow, yeah.
Because if it's narrow and lengthy, it feels like, like a marathon or a racetrack, right? You need width. See, the biggest thing which a lot of, let's say, HNIs, when they buy villas from me, they ask, what are the widths of my room? How wide is my room? Because that is where you can enjoy space. If your room is very narrow and long, then you will feel claustrophobic. So, plot selection and what he also mentioned, typology to plot. See, today, even in off-plan market, let's say even forget about Oasis. Oasis is ultra luxury. But Shubha...
There's a prod developer who sells really cheap houses, no names.
Yeah.
But what he does is, I think he makes like on 1,000 square foot plots, G plus 2 houses.
Yeah, 3,000 square feet built up. I know.
Hey, right?
FAR is 3 only.
And he's like, oh, I'll give it 40% discount. I will give it to you for 1 million, 1.5 million. And people think it's a good deal. It's like a house in Dubai for 1.5. Yeah.
No, and exactly what he said, because the problem is, see, I always, or maybe I've been conditioned now to look at villas more on their plot and floor plans. And maybe less on even that built up. I know built up is the standard trading mark that everybody requires for, understanding liquidity, price per square feet, how the stock is performing. But if you have a good size, see all of these examples that I gave, these are 4 bedrooms with 4,500 of built up. Their plots were much bigger. They were 5,000, 6,000. I think Tilal al-Furjan was almost touching 6,000.
Yeah.
It makes a huge difference, I think.
See now, so this is the whole point of analyzing the stocks. In this channel, what we do is not like what 99% of other people do. 99, I know it's a strong number. You think it's easy understanding the volume dynamics, analyzing it like a stock. Nobody does that. Nobody. That is why I see before buying, especially in these times, when if you don't know what your entry price is, what is your stock, what is your position in the market, how is the stock performing, what are the financial audits of the developer itself, are the escrow accounts in place, what's happening on the site. There are multiple angles you have to analyze. That is why we say we prepare these customized reports for investors to understand what stock you're entering into.
Absolutely.
You want to go into what our next top 3 picks are?
Absolutely. So now top 3 picks, loading soon.
So this product comes in the mass market, the Suburban core product. I try to come as close to the metro line as possible. So this is where the works are happening, as you can see. So it is serious, all right? So we're in Town Square. If you can zoom and take that school, Dubai British School. Can you zoom and get that school, please? You got it? That's Bira Oasis. And right behind that, Ellington is coming up with a new townhouse and villa community. I don't want to give prices and square footage. I don't want to give any details because it's not officially launched.
Yeah.
And I don't want to sound like the others. There should be some difference between 3X Capital and the rest of the world. So this is definitely 100% a product we would consider in our report.
See, I think
And an investment.
there are two angles to, let's say, Ellington doing this. Okay, number one, going back to the basics of Ellington as a developer itself, obviously Mr. Robert, who's the CEO, he himself was ex-Emaar, so he himself is a visionary. Ellington has always branded themselves for 2 things, which I've always believed. First, they have a genuine taste in terms of quality. They're very, end user focused in terms of, that inlet designs. So, remember, Ellington, I think, was one of the first products I talked about in our channel, where if you go to, an Ellington apartment, and typically this is what a very minute detail, right?
Yeah.
But for the women in their bathroom, right, typically for shaving, they've put this metal rod diagonal towards it, where you can actually put your leg, because this is something, right?
Wow.
See, this is extreme minute detailing. And see, and the other thing is, Ellington has always, to an extent, tried to control supply within what they do.
Okay.
They have never gone into mass production.
Yes.
I think even, DD one.
It's a genuine
very
boutique
genuine
developer.
boutique developer. And I think there's now, so Zohaib, just, finishing this off, and we'll go to the other locations. See, one thing which I really like,
This I will
talk about, otherwise.
And I will go into this. My coat's gone.
Yeah, everything is also now, just for the last, let's say, bit. I think Ellington, Lunaya, I think, the products that we're going to target, even something like Oasis, these are boutique within themselves.
Yeah.
I think this market is now going to reward higher premiums for something very boutique, something which is not replicant and which has been copied a lot. The second opportunity, right? I think in the last 1 to 1.5 years, Emaar really, announced their 3 new master plans. You have Oasis, you have Polo, you have Heights. We're actually in the location where behind you can see this is Oasis. And now we'll actually understand why this location, why Emaar, and why this is a very important investment.
So it's connected to the first section, which is your prime real estate. Prime and mature real estate. Not mature, but prime. So I'll discuss about 5 points, okay? One is macro positioning, the proximity, your connectivity matrix. 4th is the density, and finally something called the cluster effect. Now, macro positioning. Now, this is the new luxury villa corridor. We are located on the southeast end of Dubai land. Now, around me is Jumeirah Golf Estates, Tilal Al Gaf, Grand Polo, Heights. This is not a random purchase or a random play like in other sections of Dubai. This is a planned luxury corridor expansion. I want to actually show, see, if you look at that section, I want to show that section. Emaar has raised the land. Can you see it's a lot higher? They've actually raised the land. And now in a video we've shown you on the other side of Oasis. This time I wanted to show this side. The villas are already ready. You can see it's Palmyra is ready. That's how fast the construction is. Next, I want to talk about any points to add here.
No, I think, when we go towards, I think we have to refresh here.
Okay. Next is the proximity. Now, this Dubai South Belt is extremely important because this has, apart from the Maktoum airport, the aviation hub, the logistics hub, and the Expo City. Now, I don't know if many people know this, but apart from the entire trade center exhibitions, the entire global village is also going there. Apart from all the commercial hubs, it already existingly has. So I've explained this multiple times. Dubai South is going to contribute to 35% of the GDP. So we are going to a location where there is limited supply, high demand. And we are trying to enter those right prime products at the right price per square foot. They've explained the average price per square foot of the current mature prime communities. Over here, we're entering at what, 1800, 2200?
And we're between, I think, 1800 to 2000, 2200, yes. Certainly.
Connectivity matrix, I've explained again multiple times. This one road itself, the government is investing on 1.5 billion. So this particular road has connectivity to 611, which is a highway, 311, Al Khail Road, Al Fai Road, and E54. So in terms of connectivity, now, ultra HNI investors want connected yet detached communities.
Yep.
Means they want to be close to everything, but at the same time,
want to be in everything.
they want their privacy. That's exactly why the government has come up with this luxury corridor. This is Emaar's luxury corridor. Ultra low density, this you're quite a champion.
I think, you see, if you... So, there's one very interesting, thing, and I think when I was talking to an investor, he told me, see, you should also understand a lot of times density in terms of, okay, what is the community size? And obviously, what is that supply? And a lot of times, you should also try to understand community size and supply, specifically when there are, for example, this is an Unni villa and mansion community. You have Grand Polo and Heights, which are going to be a mix of villas and townhouses and semi-detached villas. And then you have something like, for example, the Dubai estate, right, where your total supply is going to touch 30,000 very soon. But out of which almost, I would say, just maybe hardly 15 to 17% is your villas and townhouses. Rest is packed with apartments. So in terms of supply, see, this is why Emaar new master communities are very important, because they want us to that pulse. I think we did a phenomenal video on this, on demand and supply, how that the market could fall. In Oasis, in Grand Polo, in let's say for example Heights, even in COVID eras with Valley and Ranches 3, Emaar has now clearly segregated that they understand where villas and townhouses come into picture. They understand that density and supply angle. Because over here, now even Oasis, there are talks, again, we don't want to mention it, but that they may 100 billion square feet, because they're not actually constructing even now 3,100 units. It's reduced to 2,000, I think 300, 2,400, that's it. They're shorting the land parcel by not much. They're controlling the density. And in this area, almost, I did a quick calculation. For 1 million square feet, you're getting only 33 villas. In other communities, for example, let's say like Acres, or for example like Dubai Hills Estate, for that 1 million square feet, if I even take about the land parcel controlled by villas and townhouses, you're almost getting 100+ villas. That density, because these are things which ultra people who are looking to invest 50 to 20 million dirhams plus, they are looking at these things. They're just not looking at, let's say, the max.
So the only communities with ultra low density are, apart from this, will be Emirates Hills, Al Barari and Jumeirah Bay Island. There's nothing.
And I think even Jumeirah Islands to an extent.
To an extent. Ultra low density, that's about it, sir. 4 communities. So this is the exact same playbook Bimal's always played with. Emirates Hills, they took advantage of the Sheikh Zayed Road expansion. Dubai Hills took advantage of the Al Khail Road expansion and being in a central location. Now, this is Dubai South's next Emaar's grand play, the new luxury corridor. Finally, the most important point is the cluster effect. Do you want to throw some lights?
See, the beauty of, and I think this is exactly what we're trying to talk about. A lot of times, this is one very interesting perspective. Address and location, right? A lot of times, your address for a lot of these people holds very high in value, which means it's not just my community, but where am I belonging here? See, the cluster effect particularly means if you're looking at Oasis today, you have Grand Polo, you have Heights, you have Jumeirah Golf Estates 1, you now have Golf Estates 2 over here, you have Tilal Al Gaf, you have these kind of communities surrounding you, where today villa prices over there, like Science and Mansions, are trading at least 2,600, 3,700, 3,000 in ready communities. Jumeirah Golf Estates 2 was trading at close to 2,600 in their off-plan launches. This cluster effect has a lot of value, because it's external to internal, what a lot of, let's say.
I want to explain something else about cluster effect. If there are any OP deals in the market, the reason they are selling at OP is purely because of cluster effect. You have to understand the impact of the cluster effect. Now let's just go to the last location. Yeah. See, I'm sorry, I really want to can you show that height bill? It's lifted. Oh my god, this exactly shows Oasis, how much they've raised the land. It's unbelievable. Look at that, how much they've raised the land. It's crazy. Okay, I'm sorry. Back to position. Okay. So point is, I really wanted to show you the plot. I will show it maybe next time. Unfortunately, by the time I go back home, it'll get quite late and we have to break our fast. So I have to show, but I've got phenomenal editors. I want to talk to you about the importance of this location. This entire belt from, let's say, Dubai Marina till the border of Abu Dhabi. There are some very interesting prime, because this is on Sheikh Zayed Road, and some opportunities on the coastline. So the people behind Barari, Nadia Zal, and her husband is Kabir Mulchandani, who is behind Five. They were invited by the government and they were given this land parcel right parallel to Sheikh Zayed Road. This is one of the last opportunities where you can leverage because of a very, very interesting payment plan. And it's Barari. It's like very, very rare opportunity. Apart from which, it's information I've received. Please, it's not confirmed, but it's information I've received. I have to be sensitive about this. Beyond has a plot over here. Emaar has technically purchased a plot over here. There's Palm Springs that's coming up a bit on the northern side. There's so much development happening in this belt. This is another section where, so we're trying to give you all the opportunities here, right? Prime, ultra luxury, your master planned community, and your suburban core. We've tried to cover all those sections in today's videos.
So I think, this has been a phenomenal video, and we're actually, we're not ending this video, but we're trying
Too long. It's been too long.
Too long. So what we really want to talk about and what we will be discussing in depth in the next, let's say, part. This is going to be more of a continuation to our previous video that we did in December in terms of options beside Palm Jebel Ali, your new coastal belt towards, let's say, the new, I would say, future of Dubai, which is Dubai South. Now, there are a couple of interesting opportunities. We are going to be discussing Lunaya, which is like your Al Barari 2.2, and it sits right on Sheikh Zayed Road, 7 minutes to Palm Jebel Ali. This is like that future first mover kind of advantage if you're looking at it from a long-term perspective. So stay tuned for our second part. I think this is going to be very, very interesting. We're going to actually go into these locations, shoot, understand the dynamics, understand demand and supply, and give our analysis.
But there are a few opportunities that we discussed today that are being launched as we speak or in the next 2 to 3 weeks.
Yep.
So if you want to take advantage, please contact us on our link, on the link below. I've given our contact details. We prepare customized reports for our investors. So how the process works is you give us a call, we understand your objective, and based on which we give specific reports.
Yeah.
We have prepared a generic report on these 4 products that we've discussed today. In our next video, I will physically go to this site, which is parallel to Sheikh Zayed Road. I'll go to this villa, which is on the coastline. Let's give approximate prices though.
See, I think, okay, for anybody looking into this was obviously independent villas, so we will be, focusing on villa editions. See, in terms of pricing, I think the ones that we're talking about on Sheikh Zayed Road, we're looking at these villas starting at almost 10 to 11 mil.
The Barari one?
The Barari ones.
Okay.
The ones which are going to be on, let's say, the future coast of Dubai, more towards your Abu Dhabi. Now, these are bigger and built up. These are typically what we call luxury high-end villas and mansions. You're looking at starting anywhere between 20-25 mil up to 40 mil, but the views are amazing, and what they've really done is
with a private beach.
Right, with a private beach and like that Hudayriyat concept as well.
Got it.
And then, at last we're going to, revisit one of our very interesting products, which was at the tip of Abu Dhabi and Dubai, where again, you're buying these kind of villas close to the beach at 5 million.
Ellington's, what I've understood, it's starting somewhere around 3.5. So I'm just giving
correct. Ellington, I think 3.5 will be for your townhouses.
Yeah.
I think, the villas will be maybe around 5, then
5 to 7 starting. I'm using starting. But these are not confirmed yet.
Correct.
But we'll be the first. If you want more again, we have the confirmed information. I cannot release it online.
Yep,
if you want the actual details, contact us and we shall be happy to assist you. Thank you for watching. And I've got one more video in line where we're going to show a live resale. So one of our investors picked up a farm gardens. So now we're going to show you how we're going to resell it and reinvest that capital. That's going to be another videos of me and Yash.
Absolutely.
And how we're going to assist the new buyer with mortgage services. So very, again, information-packed video. As always, my battery is low. But thank you so much for watching. I hope you really enjoyed this. There's a lot of effort put into these videos. So please show some love in the comments. Like, share, and subscribe. Thank you for watching. Mohammed Zohaib.
Yash, take care.
I'm Mohammed Zohaib.